Welcome to the new episode of Brave New Edge. My name is Nikola Legetic. My co-host Sinisa Stanojlovic is with me, and we have Alex Brownlee from Morningstar Investment Management as our guest today. Hi, Alex. Welcome.
Hey, how's it going? Thanks for having me.
Of course, anytime. Usually, we start this with a brief introduction of a guest and the company as well. Most people know what Morningstar is, but you work in a slightly unique department. So why don't you kind of start with that?
Yeah, so maybe just quick intro on myself, and then I think it'll be helpful to kind of give a kind of a firm background, just because I think people think of Morningstar for one thing, but specifically where I sit, people may not be aware about. So my name's Alex Brownlee. I'm a portfolio manager within Morningstar Investment Management. More specifically, I sit within our Morningstar Retirement Group. I manage custom target date funds for plan sponsors, record keepers, asset managers. Beyond target date, we'll also manage others custom multi-asset portfolios like target risk. Maybe some just kind of a quick background then on kind of the group that I sit in. So, rightfully so, I think when people hear Morningstar, they probably think of a data company. First, that they think of manager research, and they think of things like the medalist ratings or star ratings and things like that. Within Morningstar, though, specifically the group that I sit in is again the Morningstar Retirement Group. This has been I would say, a very successful growing part of the company. And if you don't mind, I'll throw a couple of kind of stats and figures out there because even when I'm talking to clients, I think they get surprised sometimes at the size of the groups. Within Morningstar Retirement, overall, we have 285 billion in assets under management and advisement, and this is as of September 30th, so it might be a little bit different at the time of the interview here. Within Morningstar Retirement, there's really three core offerings. Managed accounts continues to be, I would say, like a flagship product of ours with a little over 170 billion. We also have a fiduciary services team, so you can think of if a plan or advisor wants to outsource the fund lineup selection, the manager selection, Morningstar can do that, and we have a team that does that. And then the team that I sit on is the target date services team. We have a little over 49 billion in assets and reach over 1,000 plan sponsors. So a significant part of the business as well. And I just like to hit the high level overview because, like I said, I think a lot of people think Morningstar is just a data company, but we're doing a lot more than just that, especially within the retirement space.
Yeah, everybody thinks of it as okay. I'm buying this mutual fund, so let me go online and
For sure,
see what
yeah.
the rating is, right? I mean, but it probably is the bulk of the revenue, right? But it's I mean, I think it's interesting because actually your competition, you're such a unique company. I mean, the parent company is so unique, but on the other side, you do compete with consultants and other model portfolio, like whether it's a
For sure.
wirehouse or whatever. So I guess first you know let's get into maybe like what's your day to day or maybe even a week kind of look like. I know it's different probably every day, but just kind of
Yeah.
walk us through it.
Yeah, no, I think you'll probably hear this from a lot of people in the investment industry, especially these days. I feel like the environment's always changing. So that's one part of the job that I've loved. Right, there's always something new to learn about. Um, as far as day to day goes, if I kind of had to summarize it to the best of my ability, I would say 50% of it is client facing. So it's being in front of investment committees, advisors, consultants. It could be quarterly meetings. Updating them on their portfolios, updating them on the current market environment. If they have ad hoc questions, whatever it might be, to hop on a phone with them. And then the other half of the job is really in the weeds portfolio construction work, developing those custom target date funds for clients or whatever the offering may be. So I would say half client facing, half kind of in the weeds portfolio construction work.
Gotcha. Okay, and then if somebody asks you, and I'm asking you right now, what does Morningstar do differently? Morningstar, whether it's the target date or just in general the investment management part, do differently than the competition? Like, what do you say it's your kind of like the edge?
Yeah, no, that's a great question. I would say high level, there's a couple things that come to mind. One, again, we are a data company, so we have in-house a wealth of data. at our fingertips. I'm sure AI will be part of this conversation, and we'll get into that. But having quality data in house has been tremendously helpful. Also, just the research, and to that point, within Morningstar Retirement, we have several thought leaders within the space. Anyone familiar with the CFA curriculum, for instance, there's a good chance that you've probably read something that's been authored by someone at Morningstar. Um, to that point, if we're looking specifically at target date, I would say one differentiator, and someone with like a CFA charter holder, usually this resonates well with them, is our total wealth methodology. That's a whole separate meeting. I'm not going to get into it, but it's essentially a very robust methodology that takes a holistic approach to determining appropriate risk levels for participants developing that custom target date fund. Now, if I was talking to an advisor consultant as well, and what's kind of a differentiator, I would look at our product offerings. I think what we've developed now is essentially how much control does that advisor consultant want? Do they want to offload all of it to Morningstar? Would they like to retain a piece of that control? And what I mean by that is you could go fully custom target date fund where we can do the fund selection. We could do create the asset class models, the glide path, implement those funds. We could just create the asset class models, for instance. So maybe we just provide asset class targets to the consultant, they go ahead and implement. Or we could act as, lack of a better term, like a strategist. Maybe there's one component that they need help with and our advice on how to allocate to, and we can do that as well. In the other end of the spectrum, I mentioned managed accounts too. Increasingly, managed accounts and target date funds are coming together. You may have heard the term kind of like dynamic QDIAs, where you could blend, target date funds and managed accounts. There's that too. So I think that's a differentiator, is this element of choice where it's, we understand one size does not fit all in the retirement space, and we have an offering that should fit whatever that client needs.
I always think it's the investment allocation world tends to also it's really hard to have a long-term horizon sometimes. Like everybody's being judged on the performance of 1
Yeah,
year, or even kind of shorter term. So is it often that you run into markets going one way, your model or the in-house research is saying I personally, I mean, this is from my own investment standpoint, I like to buy, for example, a five-star manager after a bad year, right?
for
And
sure.
that's when it's
Yeah,
but everybody looks at that last number and says, oh, this guy sucks, right?
yeah.
So maybe he lost his stuff, right? But no, he has but like is it how uh, big of a I don't want to say issue, but do you run into that? And then what gives you confidence, or what's like the one thing that your model discipline, or whatever you want to call it, ensures the process if the market is going the opposite way and the clients are putting pressure on you?
Yeah, I would say that the short answer is absolutely. Performance is always a part of the conversation. I think this is where the communication and the education piece is really key. We've been really fortunate where many of our clients have been with us for over a decade, and that's not by mistake. This is a challenge 100% within especially within the target date space. And I get the question a lot, especially around performance. And one thing that we like to do is kind of reframe that conversation. What is the goal of the target date fund? And that goal is to help people get to a successfully funded retirement. That doesn't mean we're going to be hitting a home run every year, but what it means to me is really the most important thing is managing that risk along the way. And a lot of times it's avoiding major pitfalls along the way and letting the client's assets compound over the long term. Again, there's a lot of focus on short term performance, but reiterating and really focusing on the objective and managing risks along the way, I think, is key. Um, One other thing I would mention too is Morningstar really has a long history within asset allocation research. This will probably sound familiar to a lot of folks listening to this, but Ibbotson Associates, the history of our Morningstar research goes back to the Ibbotson days of developing this asset allocation research. So there's a long history of developing these expected returns across a variety of asset classes, and that's something we leverage on the team. Those capital market expectations and how we view, where we are in the market and what areas maybe to lean into or avoid. But at the end of the day, again, stressing the objective of the and the goal of the target date fund as opposed to maybe any sort of short-term performance. But as you mentioned, it's a challenge. It's always front of mind. People are going to ask the question, and rightfully so. But we like to focus on the long-term goal.
Sinisa, why don't you start with the fun stuff?
So yeah, I would actually like to understand the tech stack that you have behind you. So let's say on the day-to-day operation, so which specific AI or ML tools are providing the highest value to your day-to-day business in this case? So is it like some NLP to process regulatory filings or like clustering anomaly detection? So what are you actually prefer to use?
Yeah, so as far as I would say the really technical stuff, I'm probably not the best person to speak to, but I can certainly address this from kind of a lack of a better term, like consumer of kind of what Morningstar is doing from an AI standpoint and how I utilize it as a PM. One area that's been, I would say, really helpful for me and my team, and yeah, I mentioned a lot of like half the day to day is around client facing work, client communication. I'm sure this has been mentioned with other people you've spoken to as well, but kind of the commentary, the client materials, a lot of that we can leverage AI with, and more specifically within Morningstar, we have a digital research assistant called Mo, and this is externally facing, but we also have been leveraging. We've had access to Mo for a while internally, and kudos to Morningstar for not siloing AI and kind of letting its employees really work with it and kind of play around with the capabilities. But for instance, if I think Mo would serve as a really good way to consolidate some of the long form research Morningstar may do, or just dig up research um, on certain topics, whether that could be private credit right now or small caps, whatever it might be. Super helpful. If a client comes in with a question, Mo is a really easy resource to just see like what research have we done. We can dig further into it. Of course, after that, the research doesn't stop there, but it's a really helpful tool as far as client communications. Um, Aside from that, one other thing I want to point out too is as a PM on the custom target date side, one of our the main areas of due diligence we need to do is against other fund managers. And one thing that's been really helpful and that's really been pioneered, I would say, on the manager research side of the house for Morningstar is the quantitative ratings. And so this really expanded the coverage. Essentially, it's like you have a Morningstar analyst covering the whole universe of mutual funds now. And as I mentioned earlier, sometimes, sometimes it's Morningstar creating the fund lineup that's being used in these custom target date funds, but oftentimes it'll be a third party that's going to be creating that fund lineup. And sometimes there are funds that we may not have come across before, so that kind of kicks off a due diligence process for us. And it's really helpful on the PM side knowing that we have at least a quantitative rating, and it's even like developed text that it sounds like a Morningstar analyst. This has been trained. Again, like I'm not the most technical in this, but it is a machine learning model that's been trained essentially with our manager research analyst to basically think and write like a manager research analyst here at Morningstar. And so that's been tremendously helpful on the PM side. Um,
Let me ask, before I forget so Mo, is it is he sitting on top of all the inside company data, or is so the because the big challenge for a lot of companies is like there's a ton of stuff, but accessing it in a quick fashion is a challenge. So there's like Glean is the company that does that, kind of connects, that unifies the company data knowledge, right? And then obviously then you can access, or is it both? Is it like you can use it more like an LLM, chat GPT type of way, but it also has its pride on the interior data,
n-
or is it either or?
No, thanks for the question. So just to clarify, it's sitting on top of our research. So Mo is really specific to the Morningstar research, which I find incredibly helpful. We have access to a Chat GPT as well. We have access to the intelligence engine, but Mo specifically is sitting in our research. And one of the reasons why I like that is I think one of the issues we've seen, if you experiment with, ChatGPT or any of the LLMs, is there can be a bit of like a garbage in, garbage out, where you have to be very careful sometimes of the data it's referencing or sourcing. Where, as with Mo, I know it's sourcing the Morningstar data, the Morningstar research, so there's a much greater level of confidence in the output I'm getting from Mo, as opposed to maybe just going to another LLM. The short answer to the question, it's sitting on top of that Morningstar research, and it's going to base its answers and reference the Morningstar data and research.
And when you say that you're using this internal generated agent, and that you're actually using the ChatGPT, so like external, completely trained externally. So are you aware of how are you actually keeping the compliance and audit trails you have built around all of those AI tools to ensure that their outputs is defensible, especially to the regulatory requirements in the finance here?
Yeah, certainly the governance aspect of this has been kind of front and center to Morningstar. For instance, with the internal kind of chat GPT that we use, it's not going to be trained on any of the inputs we're putting in there. And to be clear too, we're not inputting client data or anything like that into chat GPT. What we could use it for, and what I've used it for in the past is, I think of this unsurprisingly, right? We're going to use a lot of Excel spreadsheets. So it's finding, ways to be much more efficient. Can we optimize it? Can you create this formula for me? Things like that. It, as it stands right now, there's a lot of compliance and regulations and privacy issues that we deal with day to day right now, just with the sensitivity of the data that we're handling. That doesn't change, and I think we're certainly very careful with ChatGPT as well on what we're going to utilize in ChatGPT. We haven't used it for any like client data or anything like that, but more so to gain efficiencies, help us with our day to day operations, kind of the manual work, right? So not putting anything sensitive into it, but really just to help with the operational efficiency standpoint.
Do you see this, when you say you're using, do you see AI more as a decision support tool or a decision automation tool in your world?
Yeah, so I think this is interesting. So maybe like take a step back. I want I would say AI in a narrow sense has been in our industry and within Morningstar for a long time. You go all the way back to robo advice. I would argue robo advice managed accounts is a narrow form of AI and something that we've been using for a while. You look broader in the industry, the proliferation of algorithmic trading, quantitative training, I would argue that's also AI. I know our operations teams, amongst other operations teams, have been automating processes for years, and there's a lot of automation that happens right now. So I think it's both. I'd say the near term, it's really a kind of an efficiency improvement. It's going to help with the operational side. It's going to help with, I think of like compliance comes to mind as one area that I'm sure they would love a helping hand with AI. Legal potentially another area. So I think it's more of an efficiency thing in the near term. In the long term, you know, I think it will help with decisions. I don't know if we're ever going to have, and maybe we will. We'll have like the AI PMs that are running everything. I guess I have a little bit of just uncertainty in how much of an impact this will truly have within the investment management space. At least where I sit, and specifically in retirement. I think when people think of investment management, I think numbers come to mind. That's the first thing. It's very quantitative, right? But I would argue that really, first and foremost, this is a people business, and it's built on trust and relationships. And I don't think AI is going to come in and fundamentally change that anytime soon. I think humans will still be the ones making complicated decisions, relationship decisions, business decisions.
Yeah, I feel like people, when everybody thinks of like Wall Street and things, there then these like hedge funds and high paying jobs, those are being paid out for people taking risk, right, and making decisions, and that's like it has a little bit to do with acumen and experience and things like that. I think one thing about the LLMs and things like that is like they do have a positive bias. Yeah, market goes up most of the time, like like say over a 10-year period, you're good, but it will always lean. If you're just asking like a naive retail investor was to ask a question, create me a portfolio. Just ask it now, like create me a portfolio for, it will just give you a really high beta tech stocks, right? And things that are working, because that's kind of what, if, especially if, well, you can, even when you detach it from the search online, it still has a, a risk taking bias. So you need to like put a little, constraints on it, and but again, like you said, data in, data out. So the garbage in, garbage out. So I still think that the people will always be there. I mean, even but 10 years ago, there were 100% quant funds where the guy just programs a model, right? And
100%.
an algorithm is running. He doesn't override it. So that always kind of existed. But the one where, there's always, the job, like you want a guy that doesn't look like a benchmark, right? Like you want a guy that has a large tracking error, positive, but I mean, is that has 30 stocks versus, a guy that has, or a girl that has 200 stocks in the fund, right? So I think that's always going to be the case.
Yeah, and maybe one other thing to comment, just like on the kind of the retirement lens. Yeah, I certainly could see this enhancing things like managed accounts, or AI enhancing things like managed accounts, where in the future, I could see us doing away with, a lot of times you're filling out forms, and this is not just managed accounts, but anything in like financial services. There could be a lot of forms, paperwork involved. I think AI will really help make this frictionless for the individual investor, where it'll be much more conversational. I think of within managed accounts, like maybe you get that initial recommendation, and then you can essentially chat with it and be like, can I change my retirement age to 63 instead of 65? And then they'll be like, sure, we can do that. Here's what you're going to need to adjust. Maybe your savings rate's going to need to increase a little bit. And I could see it being much more conversational like that, almost advisor like, if you will. So I think it'll just overall make things a lot more frictionless, and ease of use will increase. But as you mentioned, the people side of the business, I don't think that's ever going to change. There's always going to be that human component to this business. But I think there will be improvements made,
Yeah,
especially for the end
100%.
user.
Yeah. Oh yeah.
Yeah, this is what we see in the other industries as well. So this is like this human in the loop model, like where
Yeah,
it still remains a dominant and superior strategy over the others, because yeah, it's still that this is still not going to happen to be completely autonomous. Same with the driving, with the autonomous driving
sure.
that you
Yeah.
see right now. Still, Waymo is definitely driving, autonomously, but there is still somebody in the control center that can take over the car if this is not working. And this is definitely what we see in finance as well. What do you see once we say this? There always will be this human in the loop. So for the new talents, so what new skill set beyond the traditional financial modeling do you think will be asked by the hiring managers in the long run?
Yeah, I think just some sort of fluency with AI is going to be critical. I think, as much as I'm talking about how, you know, people will always be, or the human will always be in the loop. I think those who learn to leverage AI will have a competitive advantage over others. And that's at a business level, but that's also at an individual level. I think those who learn how to leverage it and to be more efficient, be more productive, I think that's going to be, if at an individual level, help with their career and help them add more value essentially to their team. Maybe stepping away from AI, though, again, just I think a key skill, and I know I've kind of talked about this already, but is just that communication component. This is something that, even in a world of AI, yeah, AI can write the summaries and whatnot, but I still feel like people can tell when AI's written something, and face to face, you can't fake that with clients. So I think just the communication piece is going to be an ever growing important component to someone's skill set. I think AI will certainly help with a lot of technical and hard skills. It could get people up to speed a lot faster, be a lot more efficient. But I really think this is where the soft skills could potentially shine going forward, because that's the stuff that AI can't fake or it can't help you with. You're going to need to be good at it, and a lot of times it just comes with reps and getting experience. Maybe it's taking a public speaking course, like really down to the basics. And I think that's the stuff that will be really critical going forward. It's critical today. I mean, in the world today. But I think that's going to be a skill set that could differentiate yourself going forward, because you could have a great product, and I think this is not just the investment industry. You can have a great product, but if you can't communicate that, you can't communicate the vision, the strategy, why you're doing what you're doing, it really doesn't matter at that point, because the other person that you're talking to needs to be able to understand what it is that you're doing, why you're doing it, and that's going to be such a key component going forward. And like I said, I think that's just going to be even more important as we kind of venture into this world of AI.
Yeah, I think like a big part of the job in general for in financial analysis or construction, it's resourcefulness
Yeah,
and access. Being able, it's like almost like it's almost like a investigator, like a detective, right? In a
100%.
way. So if you know how to use, it becomes a second nature how to use a lot of these tools. You're just that much faster, and you can siphon. Obviously, so getting it, then pulling out the important stuff, and then being able to communicate it. It's a 3 or 4 prong process how we want to look at it. So if you can, if this can help you with at least two of them, you're in the good hands. But like, there's some people that just don't have that. Everything's gonna take him longer, and then he's just, they might not even get to the part of the communication because they'll just get lost in the whole chain. So
Yeah,
yeah, I agree with you.
I
Yeah.
think that's so much of the role today, too, as a portfolio manager, just a professional in this industry. There's a lot of noise, right? And it's really synthesizing that information. And I think that's something AI can help with. I think AI has already proven that it can be pretty successful at pattern recognition, digging through large data sets. I think that can help in that process. So, yeah.
Yeah, yeah, 100%.
And when you're on this detective work, so like what is interesting to me is like from a portfolio manager's perspective. So how important is actually this model explainability? So do you need to know why an AI model flags some company, or is the predictions accuracy sufficient to for you to take a position in
Yeah,
this?
this is
Company or a fund? Yeah, company or a fund, I
Yeah,
guess.
yeah, I would say this is especially pertinent today, because one thing we're looking at within the custom target date space, at least one thing I would love to bring the capability. We're doing it now, but I want to bring it to greater scale. Is this idea of fully custom target date fund, but at a larger scale. So to really be able to offer any plan sponsor that's going to want a custom target date fund, that we can be very efficient at taking the inputs, creating this custom target date fund at scale, be able to partner with, whether that's other RIAs, record keepers, whatever, whoever it may be, um, in order to do that. The reason why I bring this up, though, is I think one thing that we're, as we're talking through this process, is you really can't fully eliminate kind of the human oversight, human judgment over it, because at least personally, I don't think I could fully trust whatever the AI output may be. Even with our, even with our current process, we have it's largely quantitative what we're doing today to bring our custom targeted offerings to scale. A lot of it's automated, but even then, our team is still reviewing that, just because if nothing, just to do some due diligence, make sure the output makes sense with what the inputs may have been, whether that's the specific demographics of the plan, it's fund, whether it's the fund manager level. Um, so I don't think you can fully eliminate kind of the human oversight to it. At the very least, just to do a check and to make sure what we're delivering to clients makes sense. So I don't think you'll fully eliminate that part. I think I'll just, again, make you quicker, and we can produce maybe more custom offerings at a quicker clip. But you're still going to need a team or someone, a PM, someone to do some oversight and make sure everything makes sense and sign off on that before delivering to clients. And you need to be able to explain it, right? Like
Well,
I
that
wouldn't feel comfortable being like, hey, I just ran this through an AI engine, and like, this is it, here you go. I don't think the clients would be very happy with that either. I think you need to be able to explain it, and if they're going to have questions on specific aspects of the portfolio or the whatever the offering is, you need to be able to address that question. If it's in a black box, that's just not going to cut it. I think from a compliance standpoint, that's not going to cut it either. I think we need greater transparency and insight into that process. So I couldn't see that flying at Morningstar, at least, and certainly I wouldn't feel comfortable if I couldn't explain it, the process
Right. So,
backwards and forwards to a client.
right. So yeah, I think it's, in any fundamental work, like if you just say, hey, the black box said this, right? Everybody's going to say, okay, but why? Like, explain me why this was the decision that the machine learning made or whatever. So, there is that. I mean, XAI, not the Elon Musk, but explainable AI kind of component, which is actually very complex and difficult, and people are trying to bring it, especially for like investment world, and that's what Sinisa is working on a lot of these things. People ask that, like, but why? So the quant funds never did, because it's just, okay, this is the mathematical solution, so we just go with it, right? Because it's been over time. But bringing that quant stuff to the fundamental world, 9 out of 10 people will say, okay, yeah, I mean, I see that this is the recommended action to be needed to be taken, but why? So again, in your quantitative scoring, for example, does that is there like ever like an explanation what sits behind the score? Yeah, there is.
Yeah, so like I mentioned, a lot of what we're doing today is quantitative. It's a lot. It's essentially an optimization of what we're running, and we could, we have transparency into the data, and have insight into why our optimization may be favoring one fund over another. And what I was going to say, actually, this is where it's very helpful, where we could still leverage our, our total wealth methodology, for instance, when we're building custom target date funds, or leverage our, portfolio construction process largely in optimization. But where AI can come in is help make that more efficient. So it's still our methodology, it's still our portfolio construction process, but how can we make this more efficient? Like I said, like a lot of times this could be multiple spreadsheets that we're in. How can we consolidate that? Or, I think, and this is kind of a larger, bigger picture comment. I think the people that are the firms that are going to be the most successful with AI are the ones who really rethink the process from the very beginning. And maybe it's not even Excel spreadsheets. Maybe we code a whole new program, based on our methodology, based on our portfolio construction process, but maybe we're creating something entirely different, to make the process much more efficient and streamlined. And that's stuff we're looking into right now, and how we can do that. But in the end, the backbone of that is still that methodology um, that we know very well. We could explain it very well. Our portfolio construction process. So we can point to things and explain to why it's happening. But how do we make this maybe more efficient than working through a series of Excel spreadsheets, stuff like that?
When you say you're using a, let's say, huge amount of data there, and what percentage of data flow currently comes from the alternative data sources? So I guess you are, buying a lot of those data from the arranged sources, but there are those alternative data. Are you aware of and what are you actually using, like geospatial or sentiment data? So how does this influence your day-to-day work?
Yeah. So again, I may not be the best person to address this, but one aspect of Morningstar that comes to mind is PitchBook. So if we're talking alternatives data, we do have that, a source in house for alternative data in private markets, and that's PitchBook. Um, I would say a lot of the data, though, in this space, I go back to kind of that capital markets research, that body of work that our team has done at Morningstar, and this goes back decades, where a lot of it is fundamental valuation driven. A lot of that is not, outsourcing it or finding data. We have obviously a lot of data in house that we can leverage. Morningstar Direct comes to mind. I'm in Morningstar Direct probably every single day, and that's kind of like our flagship data tool. So we can pull a ton of data just from that, and that's heavily utilized when running it through our capital market assumptions, those models to generate those expected returns, risk statistics, whatever it might be. So this is one where a lot of it, the work that me and my team are doing, at least a lot of it's in house. We can leverage Morningstar Direct data um, to get the data that we need to run these, go and run that analysis.
So let me ask you, if let's say, for your particular group, not Morningstar as a company, what are some of the targets, like looking out, maybe a year, 3 to 5 out, in terms of, business? Like, do you, is it the amount of, AUM, AUA? Is that like a KPI, or is it more expanding the market share versus the relative? Because obviously I think the industry is growing, so you don't have that issue. Is it so? Do you guys define that, or is it just
Yeah.
do the good work and whatever comes
No,
in?
there's definitely group KPIs, and we have the OKRs within Morningstar. Without going into the specifics, I mean, one of those objectives, and I think this is you mentioned it, it's to grow the assets within the Morningstar Retirement Group. Selfishly, I would love to grow the target date services assets. I think I've said this for a long time. I really think the future of target date is this fully custom target date at scale, and you could leverage RIAs, you leverage record keepers. Uh, One thing you do is you leverage other asset managers and use their funds as well within there's a lot of ways you can kind of play this, and Morningstar Retirement can really be at the center of that. And so for me, I would love to grow the target date services business. We've had a lot of success so far. We've had clients that have been with us for a long time. But like I said, I really think this custom target date at scale is the future of target date. I don't think there's, especially in 2025, that there really isn't a one size fits all. The future of the business is greater personalization. Morningstar is aware of that, and we're building the tools to help further customize and tailor these offerings to what our clients need. So, I would love to continue to grow that targeted services business and bring more stuff at scale, more offerings at scale for plans and advisors.
When you say fully custom, that means somebody comes. So now it's like retirement age, retirement year 2035, 2040, 2045, whatever. So you're saying somebody just comes in and says, make me this target date fund for 2037, and you just make it on the spot. Is that kind of what you're
Yeah.
referring?
So when I say fully custom, I'm thinking, they provide the plan provides the demographic data, and we're customizing and tailoring this custom target date fund to their plan demographic. So, and what does that entail? A lot of times, like salary, savings rate, balances, outside equity. There's other things you can factor into it, but it's taking
Okay,
that specific data and then creating a glide path. So it'll be a target date series. It'll be your 2070, 2065, 2060 vintages, all the way down to an income vintage, and
got it.
it's start to finish fully. And when I say fully custom, it's leveraging their company or their plan specific data. So we're really tailoring it to their participants.
So you honestly, like, technically, if I understand you correctly, it's like you are want to do it like from start to finish. Right now, a person goes to the advisor. The advisor does that initial. This person is 35, makes this much, works for a university, or has a high risk human capital, low risk human capital, and then they decide, let's put them in 2040 or 2045 aggressive or whatever it is. You're saying you would like to assume to make it direct to the consumer, or direct to the maybe like an allocator, or like who's the one that hands over the capital to the Morningstar Investment Management, and then tailor it from there. Like you're getting further kind of into the channel, but just from the front end.
Yeah, I would say not necessarily, at least on the target date side. I would say on the managed account side, absolutely. It could be the individual making these inputs, and that asset allocation essentially creates
Ah,
the
okay,
portfolio for the individual. On the custom target date side, though, a lot of times we're still talking to the advisor, the consultant, or the investment committee. In that case, I think what I would just like to see is, again, to make it a little bit more frictionless. Again, a lot of times it could be pretty data intensive, having to provide the plan demographic data, and then go through the whole process, the portfolio construction process of creating the custom target date fund. Whereas we have the tools and capabilities now where we can make that much more efficient. And instead of, just to kind of throw a number out there, maybe instead of 1 month it takes to go start to finish with a custom target date fund, we can turn this around in a week's time. And that would be, I think, tremendously useful to many of the advisors that I talk to, where now you don't have to go with a off the shelf option potentially.
got
You
it.
can have something that's actually tailored to the plan participants. And ultimately the goal is to get them to an allocation that's most appropriate for them, or as close as possible within a custom target date fund. So that's what we're trying to bring to the table.
Yeah, sorry, I apologize to every advisor that listens to this. I was talking about more like displacing the advisor, but no, but you're actually talking about making it more granular, right? Like just having more ways to match up with a better custom date fund if somebody needs like a very, like you said, I mean, custom. I don't want to, with the synonym. I said the word custom like 8 times in one sentence, but I mean, if somebody needs something really bespoke, that can be manufactured in a much faster fashion than having to,
Yeah, this would not
somebody
be
has to
would
come
not
up
be
with it,
replacing that
approve it.
advisor. It
Right.
would
Yeah,
just
yeah,
be
yeah.
at,
Right.
like
No,
you
for
said, in
sure.
a much faster fashion, where this kind of gives another tool in the tool belt to advisors, where they maybe don't have to go with that off the shelf option, but they can tap someone like Morningstar and be like, can you create something custom to this plan? I mean, sure, send over the demographic data and we'll create that. And I think it should give the advisors greater confidence in knowing that what we're providing to the plan participants better fits their risk appetite, or risk allowance, if you will.
Yeah, because it's really just going to be an allocation of other funds within.
Correct.
So, just fine tuning that to whatever it
And
is,
that
right?
could be the advisor picking that fund lineup, and that's one of the the benefits that I think a lot of advisors appreciate today. Some want to offload it to Morningstar, for instance, and that's fine. But a lot like to retain that control, especially with the fund lineup they've picked. They've done a lot of work, and they can then turn over the keys to Morningstar to develop, to run the asset allocation, to create the target date fund. That's where we step in. So they're still maintaining that control over the funds being used, and then looking to us for our expertise around asset allocation.
I would. I'm not the greatest, I would say, accomplice in this story that you just made, but I would go back to the data that that we started. I know that you said that this is not your primary, I would say, interest here, but from your perspective, so when we said that when we are looking for the new data sources,
Hmm.
so what do you see as the opportunities for something that is not commonly used? So are there some potential new data sources which are not utilized currently, some unstructured alternative data or tokenized assets, or I don't know, market disclosures, whatever is actually might might be consumed later on to have a real decision.
Yeah, I think what'll really help now, and I think of what are we talking about today. Obviously, one of the big topics within the retirement world is private assets, and specifically like private credit. And so I think just any like additional data there, we have again the benefit of PitchBook within Morningstar, but I think just greater transparency into private markets will be incredibly helpful. I think of things like we're digging into right now, such as default rates within private credit, recovery rates within private credit. Like those are the things that I would love to have, because just kind of thinking out loud, a lot of what we've seen is kind of there's a lot of discrepancies between what's being reported with private credit default rates. I feel like every source that I've looked at has a slightly different number, and so that's where it would definitely be beneficial to have some more transparency, greater data, greater insight into as we do due diligence on these private credit managers. So that's one aspect. I would say private markets is just front of mind right now, as that one area that again we're actively working on at Morningstar within PitchBook, and we're fortunate to have that data source. That's the first one that comes to mind for sure.
Yeah, I mean, fixed income is opaque anyway, but private fixed income, I mean, it's a
Yeah.
whole nother level of like,
And, Morningstar's like I would say they've taken great strides in improving the fixed income database, but as you mentioned, it's known to be opaque, and then private credit is another layer, another level beyond that. So anyway, we can kind of shed some transparency, get some more data behind some of this to help with our due diligence. That would, at least from a PM standpoint, that'd be much appreciated.
right. You own the DBRS, right? Morningstar's
Yes.
Morning.
Yeah.
Yeah.
Yep.
Okay. Yeah. All right, man. I think this was fabulous. You're such a unique guest that I think a lot of information is going to be new to the listeners. So again, I would like to thank you for coming. Sinisa probably as well. And
Yeah, thank you.
you
It
know,
was quite insightful. So, as I said, I wasn't able to actually cooperate on some of those topics, but the insights that I got from this data and the AI part is much valuable. And yeah, thank you
No,
for
I
this.
really appreciate the time. This is it's an interesting conversation, right? I mean, AI is front of mind for all of us and how it's shaping the industry. So, no, I appreciate the time. It's been great chatting with you both.
Anytime. We'll stay in touch for
All
sure.
right, sounds good.
Okay.
Thank
Thank you.
you.
Take care.
Thank you. Bye.